The big day finally arrived for Tata Motors investors on the 14th of October, the record date for the company's long-awaited split. If you opened your trading app on Tuesday morning and saw Tata Motors' share price drop sharply, you were not alone. But before investors panicked, here's what really happened. On Tuesday, Tata Motors shares opened below 450 rupees, a big drop from the previous session. The reason was the company's 1:1 demerger scheme. Simply put, Tata Motors was not losing value. It was restructuring its business. The stock price was merely adjusting to reflect the split. Now, Tata Motors divided its business into two independent companies. One focused entirely on passenger cars, SUVs, and Jaguar Land Rover, now called Tata Motors Passenger Vehicles Limited, and the other dedicated purely to commercial vehicles, called TML Commercial Vehicles Limited. Instead of one massive umbrella, Tata Motors now operates as two specialized companies. The record date, 14th of October, decided who received shares in the new company. For every one share of Tata Motors held, investors would receive one share of TML Commercial Vehicles, both with a face value of 2 rupees each. However, these new TML Commercial Vehicles shares did not show up in investors' demat accounts immediately. After the record date, exchanges were expected to take about 45 to 60 days to complete listing formalities. Investors can therefore expect TML Commercial Vehicles to officially list sometime in November 2025. Until then, those shares exist but remain untradeable. So why did Tata Motors stock crash nearly 40% in a single day? Before the record date, Tata Motors shares were trading at around 660 rupees on the Bombay Stock Exchange. Post demerger, they dropped to as low as 376 rupees during early trade. But this was not a loss in value. It was a mathematical adjustment. The stock price recalibrated because part of the company's value was being shifted into the new commercial vehicle entity. In a sense, investors' holdings were redistributed, not reduced. As of now, the price seen on the Bombay Stock Exchange, BSE, and the National Stock Exchange, or NSE, around 400 rupees per share, reflects only the passenger vehicle business. The Ministry of Corporate Affairs has also approved a name change from Tata Motors Limited to Tata Motors Passenger Vehicles Limited, though it continues to trade under the familiar ticker Tata Motors for now on the stock exchanges. This split gives both businesses room to grow independently. Tata's passenger car segment, with Tata's EVs, Nexon, and the premium Jaguar Land Rover lineup, can now focus on innovation and global expansion. Meanwhile, the commercial vehicle division, trucks, buses, and logistics, can concentrate on scaling operations and tapping into India's infrastructure boom. For investors, here's what the demerger meant for their portfolios. On the 14th of October, Tata Motors shares remained in their accounts as usual. The market price adjusted downward as expected. The average buy price stayed the same for the moment. There was a temporary dip in unrealized profit or loss, normal during a demerger. Once TML Commercial Vehicles lists Likely in November 2025, the new shares will automatically appear in demat accounts. At that point, brokers will adjust the average buy price between the two companies. For investors, this demerger was not a setback. It was a strategic reset. Tata Motors is betting that this focused approach will lead to stronger growth, clearer valuation, and better returns over time. The price dip was simply part of the transition, not the end of the road, but a new turn for Tata Motors.